You're listening to The Preferred Way, a retirement podcast brought to you by Preferred Trust Company, the preferred custodian for all alternative investments.
Hi, everyone, and welcome to another edition of The Preferred Way. Today, we are talking with Gannon Coffman from Streamline Capital Group. And welcome, Gannon. We're so glad you're here today.
Thank you, Chris. I appreciate your time and great to be here on National Donut Day, as you were talking about offline here.
I've got my shirt. We already gave out donuts this morning. We're good to go.
Love it. Love it. My kids will love it. We won't miss the opportunity to grab one, maybe even for lunch. So we'll see.
Hey, you know, a donut breakfast, lunch, and dinner, that's my go-to.
Never a bad day for a donut.
All right, let's get started. Why don't you tell me, first off, tell me the story behind Streamline Capital. Tell me a little bit about you guys.
Thank you so much. Streamline Capital Group is a real estate investment and development company based in Mesa, Arizona. Our co-founder and CEO, David Rizak, has been doing this for 29 years. We own assets in Chicago and in the Phoenix Metro, and we are focused on investing in value-add medical office and healthcare assets. And David has been doing this for a long time, and for years and years, he did these deals with friends and family, syndicated deals one by one, and eventually got to a point after a brief retirement period, which was more like a year-long sabbatical. He decided that he wanted to come back into the industry and make an impact, not only financially motivated, but true impact investing, making a positive impact in the communities in which we invest, and helping people to become financially literate and helping high-income earners preserve and grow their wealth. So we work a lot with professional athletes, retired athletes, high-income earners, entrepreneurs, physicians, and through our fund, Reg D 506C fund, we help people invest in tax-advantaged real estate assets.
That's awesome. So I know that you focus on medical and Class B office suites. So tell us why that particular niche?
Yeah, I appreciate it. Great question. What we have found is that medical office real estate is different than a lot of the negative headlines that you see in the news about office vacancy in these big, major metropolitan downtown areas that are suffering from 30% or 40% vacancy percentages. That is not our product class. We are investing in the foundation of the communities in which we invest. These are recession-resilient operators. These are businesses that do not get outsourced, or they are AI resilient. We believe in telehealth and all of the new technology that is coming to the industry, but at the end of the day, the majority of our tenants are anywhere from 1,000 to 5,000 square feet. They sign long-term leases. They invest heavily in their own tenant improvements. And this is recession-resistant real estate that helps to just create the communities and the bedrock in which we live and work and play as a community.
And with that kind of goes along with my next question. So Mesa, Arizona, obviously being in that surrounding Phoenix area, tell us why Phoenix?
Yeah, absolutely. So obviously we live here, we're based here. We're very bullish on Arizona and Phoenix in general. David relocated from another state. I relocated from another state. The business climate here is very favorable for real estate development, for business development, entrepreneurship, VC. In Mesa, we have a huge tech corridor with Google, Amazon, all of the big semiconductor chip manufacturers that are coming into town, like TSMC, who's investing close to $100 billion, I believe, in their project. Intel's investing another $20 billion in their campus here locally in Chandler, about 10 minutes away from where we live. And then aerospace, in defense, there's about 1,200 companies around the state focused in that arena. Healthcare is booming with all of the banner expansions. I mean, I could go on, but net migration into the state is very positive. Job growth is great. We've got a great school system here, public education, and our universities. Policies are very developer friendly. And we are excited about what's here and what's coming. It's a lot of activity, new retail development, new single family homes, which kind of leads the way in the real estate world, as you probably know and appreciate. So we're very bullish on Mesa and the Phoenix Metro in general.
Yeah, it's awesome. Phoenix is the place to be. And a lot of people are migrating there. We know that.
Yeah.
It's very similar to Vegas where we are. So yeah, it's a great area. So how do you approach acquisitions and underwriting?
Yeah, great question. So what we're looking for through our fund, which is for accredited investors, we have a $50,000 minimum. And when we're buying an asset, we're looking at generally about a 60-month hold. Now, if we can hit our return metrics before that, we can certainly cash out. And when we're looking at a capital event on the back end, we can either refinance out and bring our investors' original basis back to them, or at least a big percentage of that. They will remain in the deal infinitely and move on with us and continue to reap the rewards of that investment. And we generally are underwriting where we can get an 8% preferred return on our investment to our investors that will accrue if it's not paid in year one, because we're working through a value add improvement strategy, and then an overall 15% IRR. Some of the properties that we're looking at are on market, some are off market. We have one targeted property in mind as our first acquisition in the fund. And this is a very unique deal in the sense there is some distress on the part of the seller. If anybody's familiar with single family residential investing, the best deals are where there's distress. Nothing changes in the commercial real estate world. And this particular asset, the family, the kids who inherited the asset don't want to be landlords. So there's an opportunity for some seller financing, which also sweetens the pot, as we like to say. But we're looking at a 5-year hold, an equity multiple of 1.8 to 1.9%, meaning if you were to invest $100,000 with us in 5 years, you're going to be getting approximately $190,000 back.
That's awesome. It's interesting because you mentioned that 15%, the return on investment. So, where are you going to get that today? Alternatives are really where it is, because you don't see that in the stock market. You just don't. And so that kind of brings me to my next question. So those, obviously cash investors, very common, but a lot of people don't know you can make these same investments through your retirement account. It has to be a self-directed IRA. So talk to us a little bit about that and how you integrate self-directed IRAs and how you allow them in your investment.
Yeah, absolutely. Self-directed IRAs are a huge investment vehicle for us. And we have investors that use them for all of the reasons that you know and love and appreciate them. A lot of people don't realize that if they have a 401k or an IRA, that they can self-direct those funds. Now, more and more, you'll see these larger institutions and custodians, and there's a lot of proposals going on in Washington right now about people being able to self-direct into these alternative type assets. And I do agree that alternatives are the place to be. 15% IRR is significantly better than what is projected to be returned in the stock market over the next 4 or 5 years, which I've heard is, maybe 4%. Unless you're looking at some of these AI or tech companies, or I know Circle just IPO'd and they're a big crypto and blockchain-based company. But if you're just looking at typical the stock retirement funds, it's going to be lower than what we can do in real estate. And the magic sauce for us is really forced appreciation. If you're going to look at anything as like, why commercial real estate? That is the magic sauce. We can buy an asset, we can improve it, we can increase rents, put in streamlined property management, and realize some efficiencies and economies of scale. So simultaneously, we are increasing rents, we're decreasing our expenses, we're increasing our net operating income, and we're forcing appreciation. And at that point, you're getting cash flow, depreciation, appreciation, and tax advantages as they're applicable to you, which can be very, very
well, it's very attractive for a self-directed IRA, that's for sure.
Yeah, exactly. And then through your self-directed IRA, as you know and appreciate, these grow tax-free, right? The tax advantaged investments. So if
Correct.
you're making a net $90,000 over 5 years, that's straight to the bottom line.
Absolutely. Yeah, it's fantastic. We don't, obviously there's not a whole lot of education out there. I think now more and more today we hear about alternatives. We are talking about alternatives, but there's still a need for education out there about self-directed IRAs and how you can, make the choices of the investments you want to make for your retirement account. You don't have to stick with a financial advisor who's picking them for you and limiting you to what you can invest in. So there is such a large amount of purchasing power out there still that's underutilized through self-directed IRAs.
And trillions of dollars right now
Trillions of dollars.
that
Yep.
will be coming
So
through that pipeline.
if you're out there and you keep, and this is what we see people, they get their statement from their big box custodian and they don't even look at it anymore. They shove it in a drawer because they know, like to your point, 2, 3, 4%. They're not doing very well and they don't want to think about it. They shove it in a drawer and leave it alone. And really, gosh, you have an opportunity to change your whole retirement trajectory if you just think a little bit outside the box.
Yeah, absolutely. 100%. And maybe that would be a good dovetail into you explaining to our listeners a little bit more about what exactly a self-directed IRA is and how it differs from a traditional IRA at a brokerage firm like Schwab or Fidelity.
Yeah, a lot of times people think self-directed IRA. Well, no, I don't want to get into that because it's a taxable event and I don't have to. No. The first thing that I think everybody needs to understand is that a self-directed IRA is still a qualified retirement account.
Yeah.
The only difference between us and a big box, such as, let's say, Edward Jones or Charles Schwab, is that we specialize in alternatives. So everything that is not publicly traded, while they specialize in things, stocks, bonds, mutual funds. We are regulated exactly the same way. We follow the same IRS rules and regulations. There is no taxable event to take your money from a Charles Schwab and put it over with a preferred trust. It's one qualified retirement account to another. You're just selecting different investments. And over here on the big box side, the Schwabs of the world, they really don't get paid to give you investment advice about alternatives because that's not what they specialize in. That's not what their suite of products is. And over here on our side, we're not licensed for the stock market. We are focused truly on those alternatives, the real estate, the precious metals, digital currency, startup companies, all of that type of investment. So those are the only differences on what you invest in. So if someone out there is thinking, oh, I don't want to do this, I don't want to make it a taxable, it's not going to be. It's not a taxable event. You can have these great investments and you can actually have both types of accounts. And we encourage people to diversify and to make sure that they don't put all of their eggs in one basket. So keeping some things in the stock market, that's great, but also give yourself the opportunity to test the waters with some alternatives and have an opportunity to start raising that ROI.
And that's really informative and great insight, and maybe something that you could share for people listening. I know when I got started, what do the logistics look like as far as onboarding, or what should I know as far as the process of transferring or rolling over retirement funds into a self-directed IRA?
We try and make it as seamless as possible. And so similar to when you started the process with your big box company, you have to fill out an application. We've got to get certain information from you because, well, the IRS requires that of us. But it's a couple pages. We make it very easy for you. We have it all online. So it's very efficient. You can go onto our website, you fill out the application, it gets sent to us. And then we're contacting you within a couple hours of receiving your application. We're going to ask you, where is your current retirement account? Do you have a 401k? What are we working with? Just to figure out what our next step is. And then based on that, we'll initiate the transfer of funds from wherever you're currently holding your retirement account. We'll ask you to work with them to liquidate, and it can be just a portion. People always want to know, well, do I have to take the whole account with me? No, you do not.
Gotcha.
Yeah, you can take a portion of the account. And then we just follow up with the other custodian for a timeline on the transfer of funds. And when they get to us, when the funds reach us, then we're ready to make the investment. So if they're working with a Streamline, and we're working with a company like you all, then we prepare the investment documents based on what your offering is, and we send them out to them to approve everything. And then once we get that back, we're sending the funds over to Streamline to make the investment. And then why don't you tell us a little bit about too, once the investment happens, how often are they receiving payments back into their retirement account?
Yeah, great question. So we provide quarterly payments and distributions is what they're referred to. And
Yep.
if for example, we acquire an asset and the strategy is to move it from a gross lease or modified lease structure to a triple net, and we are re-tenanting the building, making some improvements and going after a potentially different type of investment or leasing tenant, there may be some time where those distributions aren't paid initially, but they will accrue. But you'll be caught up to speed at some point. But really, these things start to hum at the end of year 2, beginning of year 3. And then we will continue to ride that improvement plan up until the point where we can either cash out and refinance or sell the property. And that's potentially market dependent. We like to hold on to them. We're buy and hold investors. And one thing that Streamline does that I'd like to highlight that not a lot of other syndications companies do is when we have a capital event and we refinance out, and let's say you invested $100,000 and we refinance and you get that $100,000 back, you will stay in the deal for the lifetime. And at that point, your returns can become infinite because you've already received your basis back. And so everything's just icing on the cake. Whereas a lot of times, other syndication or investment companies will cash you out on that refi. They'll keep the asset. You'll be made whole. Your projections will be hit. They won't have done anything wrong. However, we really incentivize our investors to play the long game with us, because why kill the golden goose? Otherwise you're just going to have to go find something else to roll into.
Yeah, absolutely.
Yeah.
So I think, is there anything you want to talk about from a standpoint, what the investor should know once they have a self-directed IRA and they're investing with you?
Yeah, so I would say, so there's hand holding, obviously, because
Yes.
what I like to say is we just move at the speed of instruction, right? If you're taking a road trip, you don't know exactly how to get all the way to where you're going. You drive to the end of the horizon and then you reevaluate, right? So you guys are there. We are there. There's coaching and helping along the way. So they're not, investors are not doing this alone. But can
Correct.
you just speak maybe to some of the misconceptions that investors should be aware of, before opening an IRA, and
Yeah.
shed some light on that?
Yeah, absolutely. I think one of the biggest things, like I mentioned before, is that this is a going to be a taxable event for them. There's a lot of fear in that, and I think some of that too comes from, and I hate to say this, but it's kind of true, from their current financial advisors or the company that they're working with. Let's remember, nobody likes to lose business. Nobody likes to be sending money out of their, out of their business. So I think one of the things that we're always trying to fight, and one of the things that we realize people don't completely understand, is that it is legal. I've heard financial advisors tell clients, no, you can't invest in real estate through your IRA. That's not legal. Okay. They really should be more careful at those kind of things, because it very much is legal. It very much is an IRS approved investment. They're just not getting paid for it. So they don't want to talk about it. They want to keep your money right where it is. So I think that's a huge misconception. So what people need to absolutely know is, yes, it's all approved by the IRS. Our licensing is through, as a financial institution, we are regulated by the IRS, just like they are. So it absolutely is doable. And then another one, I think, is the misconception that I have to move all of my money over all at one time.
Yeah, that's a big one. Yeah.
Yeah, that's a big one. I think, one of the things to really think about is what are you thinking about investing in? Do you have a specific company like Streamline in mind? And do they have a minimum investment amount? What is that minimum investment amount? And so we encourage people start with the minimum if you haven't done this before,
Yep.
and then see how it goes. And then if you want to add more, we can always help you transfer additional funds over. There's no limit to IRA transfers. So get your feet wet in the alternative space and see how it's going. So I think that's another huge thing.
Yeah, absolutely. Great recommendations.
Yeah. And then I also think, a lot of times they'll talk to us. We're very, very transparent about our fees. And how much it costs to open a self-directed IRA. It's different than what you're seeing on the big box side. They get paid differently. They make their money different. But I think we hear a lot of times from clients, they'll say, oh, well, I have a free IRA at Schwab. I don't pay anything to have. Okay, well, nobody works for free. So, right. But they make money off of the investments. As you're earning, so are they.
Yeah.
And that's different. We don't take any money from your investment. Whatever you make, whatever your income generated from that investment is, that's yours to keep in your IRA. We have fees for administering your IRA and keeping custody of your assets. So we do both have fee structures, and so I think sometimes people are they have that misconception that somehow what they're getting right now is absolutely completely free.
Gotcha. And so is there a minimum or a maximum on your side as far as how much somebody could potentially invest with Streamline?
No. So whatever the investment sponsor is offering, whatever their minimum is,
Yeah.
that's, you just need a couple $100s to open the account up.
Yeah, sure.
And then, you can, like I said, you can use however much you want, or, some investments have a lower barrier to entry. It depends on the investment class, right? Precious metals, for instance. I mean, it depends on the precious metals. It depends on the quantity. It depends on how many, all these different things, right? So it just depends on what you're looking to invest in. And then you can select the amount. Like I said, you always have that option to transfer additional over. And the other good thing is too, you can pay the fees via a credit card or personal funds and leave all of the money intact in your IRA to actually invest and make the investment. So
Love it.
yeah.
Love it. So one
Yeah.
thing, I guess, in conclusion here, as we're wrapping up, if there's anything that you'd like to touch on, I mean, obviously we know that's why we partnered with Preferred, but what makes Preferred Trust different from any other self-directed IRA custodian in the industry? Anything that you'd like to touch on?
Sure. I love that question. Obviously, we don't have a product to sell. We don't sell anything but our service. That's what we're here for. And a lot of people for a long time, just assumed, it can be stressful. We're the necessary evil for them to get from earning in their retirement account to getting to that
Sure.
investment, right?
Yep.
And so we try and make it as efficient and painless as we can for the client. One of the big things that makes us different is that the principals who started the company, their background is real estate and investing, and every angle of real estate. And so they understood that time is money. And that's one of the things that we've kept with us throughout the years of our expansion, is that we know people are, if you cannot fund an investment quickly, those people are missing out on their opportunity to earn additional funds for their retirement. So that's a huge thing. So fast, efficient service. We are not as big as Charles Schwab. We don't ever want to be. We want to be able to provide that personalized service to our clients. We want our clients to know that when they need to talk to us and they call, we're going to pick up the phone. If they send us an email, you're going to get a response. And I'm also a super big micromanager, so I make sure everything is taken.
Love it. Everyone needs a good micromanager on the team.
Yes. So I make sure every call and every email is answered. I don't want anybody to ever get dropped or feel like, we hear horror stories about that all the time from people that have said, I sat on hold for an hour and nobody picked up the phone, or, I've left a voice message every day for the last 5 days and nobody ever called me back. That's the last thing we want to do.
So you actually get to talk to a human.
You do get to talk to a human.
Always helps.
Yes. Yes.
Always.
100%.
Well, this has been great. I think this has been very informative and very informational.
Yeah, we appreciate you guys being on today. I think it's important for everybody who's listening out there. If you're interested in Streamline, if you're interested in getting started with a self-directed IRA, give us a call. You can visit our website. We can link you with Gannon and his team over at Streamline. If you're thinking, this is what I want to do, let's get you started. Give us a call, reach out to us, email us, and I'm sure they can reach out to you as well, Gannon.
Yeah, absolutely. People are invited to call or email. I'm on LinkedIn. I'm very easily accessible. And we have got booking links for no pressure, easy informational intro call. If you'd like to learn more about what we're doing, I would welcome the invite.
Yeah, and we do as well. If you want to do a consult with one of our IRA experts, you can set up a time directly from our website, and we will give you a call and answer any questions that you might have. So thanks, Gannon. We appreciate your time today. We appreciate having you on the Preferred Way. It's always nice to see successful up-and-coming companies who are just doing an awesome job for their clients.
Thank you, Chris. Looking forward to working with you guys more and more as we move forward here, and I hope you have a great day.
Same. You too. Enjoy your donut.
Headed that way now.
Y'all have a good day, and thank you for joining us on another edition of The Preferred Way.
Thanks for joining us for another episode where retirement savers meet alternative investments. Can't wait for the next episode to learn more? Visit our website at preferredtrustcompany.com.